Let's get a bit of an early look now at what we can expect from the local market when we kick off in around 2 hours' time. Evan Lucas from IG in Melbourne joins us. Evan, good morning to you. It certainly seemed to be a case of risk on again overnight. More positive US economic data helping to drive the Dow to another record close. Do you expect this to flow through to the Australian market today?
Yeah, certainly do. Look, it was a bit of a tale of two sort of stories overnight between the two Atlantics. Looking sort of at the US again had some really strong economic data coming out last night. We obviously saw the fact that the unemployment data that came out with new starts was obviously again ahead of expectations. It really does mean that it's all boding well for tonight's major data, which is actually the official unemployment data lead. Look, looking to the start of this week, we've seen non-farm payroll up, we've seen the unemployment claims obviously last night up, and if you strip out the unemployment part of the services PMI data, that was also ahead of expectations at about 55. It all looks very good. It therefore means a lot of people are positioning themselves to really take advantage of that US lead and moving further forward there as well. The other thing that I took out of last night, there was a report that came out talking about household wealth in the US. It's back at 5-year highs. It's jumped up about 10% in that last sort of quarter of 2012. It's up around $66.1 trillion. Reasons for it obviously also is the fact that we have seen the markets really move further forward. It's really making sure that our optimism over in the US is really sustained at the family level, and it does therefore sort of suggest that a lot of people are a bit more optimistic. They're spending more. Businesses also are increasing their sort of spending as well. And getting back to obviously what we saw last night with the trade deficit, look, the trade deficit in the US actually widened slightly, a little bit ahead of our expectations at about $42.6 billion. Main reason for it was actually a cost to their sort of crude oil expenditure. Obviously energy is increasing, and economists actually expect that to continue with the fact that consumer spending and also business spending will increase in the US over the coming months because things are improving.
Evan, looking across to Europe, we saw, of course, that ECB meeting, the central bank keeping rates on hold as expected. We saw the euro on the back of that meeting test fresh March highs, with Draghi, I guess, giving really no indication of further easing anytime soon. Are these comments positive for the euro in the short term?
Look, I've got to be honest with you, I actually was expecting this completely. I mean, why should he actually move? If you have a look at periphery bonds in Europe, even with the current sort of political turmoil going on in Italy, Italian bonds are sliding back after the initial jump. We're seeing Spanish bonds also dropping away as well. There is a bit of stability going on in the Eurozone. Look, it is still in contractionary period. They did actually downgrade their outlook to about 0.5 contraction this year. But the ECB's main job is stability, and as far as we can see, stability has been maintained. They're really making sure that they've got their finger on the pulse. They've got everything in their back pocket if they need to. They haven't pressed any sort of OMT loans yet. They're still having their balance sheet organically growing with the fact that LITRO loans are returning. It does look quite stable. It's why they kept rates at 0.75%. And it does really sort of explain the fact that at the moment, the ECB is really watching the euro very closely. Obviously, we did see it jump up quite hard. A lot of people had positioned themselves for some probably more dovish views and maybe even some movement on rates. We saw the euro therefore jump back above that 130 level that it slid back behind. It's well and truly below what a lot of people were calling for about sort of 3 or 4 months ago when they're looking at about $1.37. Europe is still on that sort of downward track, and the only thing that sort of I noticed last night that was a little bit of a disappointment was in Germany. Obviously, we saw German factory orders unexpectedly fall about 1.9% in January. Look, it is a reason for that sort of, again, that sovereign debt issue that we're sort of seeing over there. It did probably curb demand. It obviously saw the DAX drop off on the result, but it did actually manage to claw its way all the way back into the green. And the Dow is now, the DAX is now back at 5-year highs as well, and so is most of Europe. So I'm not surprised by Mario Draghi's comments, and I would obviously expect that to hold for probably the interim period.
Evan, it is a Friday, so we usually don't get our hopes up too much about what to expect from the local session today. But is there much regional news around that might help sentiment, as well as that good lead we've seen from Wall Street?
Yeah, looking, first of all, taking on the good lead, look, we are looking at matching up about 22 points the last I looked. It means we're moving about to 51.30, 51.31 points or thereabouts from the close last night. It's obviously a very strong finish to what has been a very positive week considering what happened on Monday. The main players will probably be the banks. We saw obviously over in the US, the banks being the major player. Over on the S&P and on the Dow, main reason for that obviously was that household wealth. Obviously the possibility now of bad loans is declining with the fact that household wealth is improving. The main data for our market, particularly today, will be Chinese trade balance data. It's out about 1 p.m. our time. There is a big prediction that they may actually see it contract quite hard, coming down from obviously being an export-driven sort of market into actually an import-driven. It may therefore see that the Chinese government, with Xi Jinping taking over this week with the end of the National People's Conference, looking at maybe sort of putting a stop on imports, that will affect our market. It'll be very interesting to see what happens at 1 p.m. and whether or not the Chinese actually do have a sort of a deficit in terms of their trade balance. So that's the main piece of data that will drive us in the afternoon. A lot of people obviously also reassess their positions heading into the weekend to get further leads out of Europe and the US.
All right, Evan Lucas from IG, appreciate the update. Thank you.
Thanks, Liz.